Hello, this is Nariman Behravesh. Welcome to the IHS Global Insight podcast on the top 10 economic predictions for 2011. Prediction number one, the U.S. economy will pick up steam as the year progresses. We expect growth in the first half of the year to be around 3% and around 3.5% in the second half of the year. In this context, the White House congressional tax package will probably add 0.6% to growth and reduce the unemployment rate by 0.2 to 0.3%. Prediction number two, Europe and Japan will also see slightly higher growth as the year progresses. In the case of Europe, there'll be early headwinds in the form of fiscal austerity programs and potentially more jitters about sovereign debt problems. However, we believe that a lot of these will dissipate as the year progresses, and Europe as well will do well and grow stronger. There's an interesting north-south divide in Europe. Northern Europe, we think, will grow between 1.5% and 2%, whereas Southern Europe will only grow around 1% or possibly even less than that. So we are looking at a two-speed Europe as well as a two-speed world. In the case of Japan, growth has been very strong, but we don't think it's sustainable, and we expect growth to decelerate quite considerably, certainly in the early parts of 2011. Prediction number three, the emerging markets will also slow a little, but continue to grow about 3 times as fast as the developed markets. This two-speed world is likely to be a key feature of the global economy in 2011. It's certainly been a key feature in 2009 and 2010. We expect it to continue. We think that growth in 2011 in the emerging world will be a little over 6%, whereas in the industrial world it'll be just over 2%. The star region of the global economy will continue to be China and the rest of Asia. Prediction number four, interest rates will remain on hold in the key developed economies, but will continue to rise in many emerging markets. The key central banks, such as the Fed, the European Central Bank, Bank of England, Bank of Japan, and Bank of Canada, will keep interest rates at rock bottom levels through most of 2011. On the other hand, in many emerging markets, China, India, and so on, we will likely see interest rate increases continuing throughout much of 2011 as many of these central banks try to slow down and cool down their economies. Prediction number five, fiscal policy will become tighter in many key economies. This is especially true in Europe, where some countries, such as the UK and Germany, are doing this more or less voluntarily, where some countries, such as Greece, Ireland, Portugal, are doing it under duress. And these fiscal policy adjustments are likely to be quite large for some of these hardest hit economies. The U.S., on the other hand, is likely to go in the opposite direction, and we will see more fiscal stimulus or looser fiscal policy in 2011. Prediction number six, commodity prices will move up gradually. In 2010, commodity prices were very volatile, and in the end basically moved sideways, up, down, whereas in 2011, we expect the pressure to be more or less on the upside, as growth accelerates through the year. And we expect most commodity prices to rise between 5 and 10% throughout 2011. Prediction number seven, inflation will not be a problem in the developed world, but will continue to rise in the emerging markets. Just to put some numbers behind this, we expect inflation in the industrialized economies of the developed world to average around 1.5% in 2011, whereas in the emerging markets, we expect inflation to average around 5.5%. Strong growth is a key factor here, as is the tight management or fixing of exchange rates in many countries, especially in Asia and in the Middle East. Prediction number eight, global imbalances will neither improve or worsen by much in 2011. Let's take the U.S. as an example. We think over the next couple of years, the current account deficit will be stuck at around 500 billion. And what we have going here are two countervailing forces. On the side of improving the deficit is the fact that the U.S. will enjoy export-led growth. On the side of worsening the deficit, we'll have the fact that the oil import bill will rise as oil prices rise. So these two will largely offset one another, and so the U.S. current account deficit will not move by very much in the next year or two. Prediction number 9. The U.S. dollar will continue to slide against most currencies with a possible exception of the euro. Because of the large U.S. current account deficit, the pressure on the dollar will be largely downward, in particular against emerging market currencies, including, one has to say, the Chinese renminbi. So those currencies will appreciate against the dollar. The one exception is the euro, and here the euro could come under further downward pressure, which would mean the dollar would rise in value relative to the euro if there are further crises having to do with sovereign debt problems in Europe. Prediction number 10. There will be no shortage of black swans or risks, but not all of them bad. They're both downside risks and upside risks. On the downside, we have certainly the potential for more sovereign debt problems, especially in Europe. We have the potential for deeper housing recessions. We have the potential for policy mistakes. But we also have some upside risks. For example, we could see a much bigger unleashing of pent-up demand, especially consumer pent-up demand in the U.S., in Europe, and in Asia. We have the potential for much stronger productivity growth, especially in the U.S. And we have the potential for greater business optimism, which could mean more spending and more hiring by businesses worldwide. Thank you very much.